Hello and welcome to Startup Street. I'm Arundhati Ramnan and these are the top headlines from the startup world. CNBC TV18 Newsbreak confirms Zerodha co-founder Nikhil Kamath increases his stake in gaming company Nazara Tech by investing 100 crore rupees. Kamath says he is looking to increase his stake even further and expects the gaming industry to grow multifold in 10 years. Amazon to allocate $15 million from its $100 million Right Now Climate Fund for nature-based solutions in the Asia-Pacific region. Of this, the first $3 million will support nature-based projects in India. Mental health platform Listen bags $1.3 million in a seed funding round led by Inflection Point Ventures and Rain Matter Capital. The funds will be utilized in tech development and expansion of child development centers. Paytm launches a soundbox device that lets merchants accept both mobile and card payments across networks, including Visa, MasterCard, American Express, and homegrown RuPay. This comes as Pine Labs announced a similar device. Alibaba Group's cloud division is weighing raising funds via private round from Chinese state-owned enterprises ahead of the business market debut in Hong Kong. Bloomberg News reported the tech giant is working with advisors on a potential fundraise by its cloud intelligence unit that could mop up about $1.5 to $2.75 billion. Those were the headlines that we're tracking for you this evening. But the top story, a CNBC TV18 Newsbreak confirmed Zerodha co-founder Nikhil Kamath increased his stake to 3.5% in Nazara Tech by investing 100 crore rupees. Now, shares of the gaming company rallied in trade on the back of this news. And speaking exclusively to CNBC TV18, Kamath said that he is looking to increase his stake further in the company. Meanwhile, Nazara Tech's joint managing director and CEO Nitesh Mittersain has said bringing Kamath on board was a big success for the company. Take a look.
Broadly, the thesis for me has been, especially in the younger generation, I think the feedback loop that interactive content provides is gaining a large amount of traction. I think this space, which is gaming and esports, will grow at a pace faster than old school content. Very likely, I'm looking at this as a really long-term play and would love to engage with them more in the future, maybe increase and play the esport gaming thing through them. So my larger bet is in 10 years from now, gaming will be a bigger part of the ecosystem than it is today. And the stake was about 1%. I think now it should be up to about 3.5%. No, nothing at all. So this has nothing to do with Zerodha, really. Zerodha will not be investing into this. This is more of a personal investment for me.
Nikhil, what is the size of the investment for you?
I think it should be about 160 crores, if I'm not wrong.
I think, from an India tech entrepreneurial perspective, Nikhil Kamath embodies, success and running a very profitable business, pioneering in his space. And from that perspective, I think bringing him on board was something we were very excited about.
Did you have other offers on the table?
No, this was a specific proposal that we from him.
And what about your plans to raise 750 crore? You have an enabling resolution where you can raise up to 750 crore, which could be via a combination of QIP or preferential issues. Now, 100 crores has been raised. What about the balance 650 crores?
That's right. Our board and shareholders have approved a fundraise up to 750 crores. And, as the opportunities come up and as we require these funds, we will, try and execute that. At this point of time, the only amount we have raised is this particular 100 crores through a preferential issue.
Nitish, you were just, mentioning about the Kamath brothers coming in, and they did mention to us earlier this morning that they would be happy to raise further stake within the company. Is that something that you would be open to then?
Our focus, is on, as you know, it is on continuously building Nazara into a diversified gaming platform. And we are always happy to associate with, great investors. We've been always very lucky over our 2-decade, history of getting, marquee, highly respected investors to back us. Because I believe they believe our dream, which is, that gaming will become big in India. We've been pursuing this dream for 2 decades. And therefore, any association with any highly respected investor is always something we always look forward to.
Nitish, so what's the game plan? You've got 100 crores right now from Nikhil Kamath. You have this enabling resolution. So this year, or let's talk next year, how much money would you want to raise?
So it really depends on the opportunities we see. We do see many opportunities in the gaming space through our existing organic growth of businesses, as well as additional acquisitions or investments that we may do, or some of our subsidiaries may do. So depending on how these things roll out, we may raise the funds accordingly.
What are these opportunities? Do you see something immediately on the horizon? What's the kind of size that you would be comfortable digesting?
Sure. I think one area we are quite focused on is building out the library of core gaming IPs that we have through game development studios. So as you know, we today own Kidopia, we have Animal Jam, we have World Cricket Championship. And I think if our company can own very strong franchises and core gaming IPs, these can be monetized over a really long period of time, globally as well as in India as the Indian market develops. So I think building out our core gaming IP library is something that is a priority for us. We have been in discussions and building a pipeline for over the last year or so, as the market has offered us many opportunities and at good values. So hopefully we will be able to bring some of them to conclusion over the next months or year to come.
Nikhil Kamath also said this is kind of a decadal opportunity, the whole gaming ecosystem. And the growth in the gaming industry is going to be much faster, much higher than what we've seen in the traditional other industries, consumption, etc. What's the kind of 10-year annual growth that you're looking at for the industry or for your company? What are the own internal assessments as you invest more money in?
Look, globally, if you see, and especially if you look into the US, gaming is a much larger revenue generating industry as compared to Hollywood and music industry, etc. put together. In India, you're already seeing that gaming from a consumption perspective ranks number 1 or number 2 in the world in terms of number of downloads onto mobile phones. But we are lagging on the monetization part of it. I think that is slowly but steadily catching up. Indians will be willing to pay small amounts of money for additional levels or playing in the games, and I think that will really blow up into a pretty large amount. Difficult for me to predict a percentage at this point of time, but we've been very patient. As you know, our company started decades ago with the dream that gaming will become very big in India one day. We have pursued that dream for 2 decades, so we are very patient and we will continue doing that over the next few years. I am very sure that India is emerging as the gaming nation of the world, and that is our singular focus and dream.
Apart from Nazara Tech, Nikhil Kamath owns stake in many other companies in India. Hormaz Fatakia takes a look at Kamath's various investments and how they have fared over the years. Hormaz?
Well, Nikhil Kamath, in an interaction with CNBC TV18 earlier today, mentioned that besides Nazara, he has investments in other listed entities as well. So we tried to dig a bit of data and stumbled upon 4 other names in which he has a stake. But here are some other filters that we have put in place to come up with this data. First up, all of this data is available on the exchanges. Next up, the data that is available on the exchanges is in excess of 1%. Now, all the stakes are in the name of Zerodha Broking, and also that all of these stakes are as of June 30th of 2023. And lastly, a disclaimer that there may be other entities in which Nikhil Kamath may have a stake as well. So let's take a look at these 4 names, and first up is Federal Bank. Now, Zerodha's name in the private lender showed up in the list of shareholders for the first time in the September 2022 quarter. Now, as of date, Nikhil Kamath, Zerodha Broking, owns 1.06% stake that is valued at close to 350 crore rupees. Now, since September of last year, shares of Federal Bank have gone up by 16%. Next up is RBL Bank, which is already in the news because of Mahindra & Mahindra acquiring a stake in it. Now, Zerodha also has a stake since December of last year, and that 1.26% stake is valued at close to 180 crore rupees. Now, since December of 2022, shares of RBL Bank are up close to 30%. BSE is up next, and it just refuses to stay away from the headlines, courtesy its proposed share buyback and the action after that. But Zerodha had first acquired a 1.6% stake in BSE in September of 2020, which had gradually increased to 3.7% as of June 2021. As of date, that 3.7% stake is valued at close to 200 crore rupees. But the more interesting bit is that since September of 2020, shares of BSE have risen by a whopping 500%. Now lastly, an interesting name that features in this list is Car Trade Technologies. Now Zerodha's stake first showed up in the shareholders' names in March of this year, and that 1.2% stake is valued at around 30 crore rupees. But the interesting bit is that while Car Trade shares have declined nearly 70% from their IPO price, they are up 16% in the last 6 months, and that is from March of this year.
Right, Harmaz. Many thanks for those details. Now, the second edition of the Global Fintech Fest is all set to kick off in Mumbai tomorrow. The event, which will see over 800 speakers and 50,000 delegates, hopes to facilitate around $15 to $20 million worth of funding for fintechs. Startups which have already been vetted by GFF will be making pitches to investors present at the event. My colleague Ritu Singh spoke to two members of the GFF board, Naveen Surya Srinivas Jain, as well as Yashraj Erande, the MD and partner at BCG and APAC Fintech Practice Lead. She began by asking Naveen how exactly this global fintech came to be and what is expected from this second edition. Take a look.
If you look at India today, today's India in last decade and a half is very different than what it was about a century back, or even probably slight bit prior to that. Today, we are talking about a thought leadership. Today you're talking about being in a sun and a moon, being the largest. And again, fintech, we have been the largest ecosystem, third largest already in the world. If you look at it, took us a lot more time to even produce one large traditional bank amongst top 10, but we are there. So while we are gearing up, the leadership in this space was very important. The kind of innovation that we've done, right from payments to wealth to lending and every other areas of the fintech ecosystem. This was an apt time for us to look at to create our own thought leadership platform where we could talk to the whole world, or we could collaborate with the whole world from India and with the world. So that was the reason we kind of conceived this. Last year was our first physical version. We were already second largest in the world. This year, with the scale that we are talking about, we are very well set to emerge as one of the largest or the largest event or a platform, thought leadership platform in the world.
In fact, Srinivas, I was coming to you on that. What should we expect in terms of the scale? Because if you could compare it to the last year's event, what you were able to achieve, and therefore this year, how much bigger is the fest going to be?
Yeah, thank you. I think it's going to be a much, much larger event. Naveen kind of hinted, we expect this year to be hopefully the largest, much larger than what we were last year. There are fintechs, organizations, large banks, even RBI and NPCI, showcasing their products and the product roadmap. We have closed door sessions with government to government, business to business, and many fintech organizations will be part of this. One of the key things that we will do this year to continue our thought leadership is our 15 plus odd reports that will come out as part of this event this year. And we also have academia participating this year. We have about 81 plus academic paper, which will be kind of showcased during this event. One last thing, like last year, we have expanded our hackathon. We have 3 hackathon, one run by SEBI on empowering investors, the second one by NABARD on agri funds, and third by State Bank of India for a pitch to SBI process.
Yashraj, what is the key theme for this year, and what are you most looking forward to?
See, all the analysis that we have done to really add depth to this year's event points in one direction. Asia Pacific is going to be the center of gravity for fintech innovation, and fintech investment. So the theme that really pops out is, in this wave of fintech growth post-pandemic, there are 3 words that really matter. It's inclusive, it's resilient, and it's sustainable. So as we look at the variety of tracks that we will be focused on through the 3 days, and the research papers that will get published, and the conversations that will happen around talent and capital, I think these 3 things really stand out. We are looking at fintechs that are inclusive, which means people and businesses, which no matter irrespective of their size, are really taken along.
Well, Naveen, we were talking about the funding environment earlier, and Srinivas said, funding winter, no funding winter. The industry, of course, is moving ahead. But through this 3-day event where you have both the startup founders as well as the investors coming together on the same stage, what should we expect? I mean, is there committed capital already that you've lined up?
First of all, a quick view on this whole funding winter. The reality is the funding winter was more of a West concept, and it emerged mainly from our public markets. And again, if you see reality, there it happens because most of the market in financial services is already developed. And you already have a penetration done. It was an incremental benefit with fintechs. So you saw some of those melt down, and that slightly affected the public markets in India. So there has been a temporary kind of impact. Now coming at what to expect at GFF for fintech, so for funding, this time we divided the funding part into 3 different segments. One, we have been working with startups. We invited applications. Over 250 applications were received by us who were looking for funding up to $5 million, which has been kind of screened by a lot of our investment partners. And again, about 50 of those companies will be presenting their pitches to these companies to be selected for further diligence and closing the deal with them. So that's the one part. So these are the companies who will surely kind of get into this. Over and above that, we have a growth stage funds. There are about 50 of them who are all there. So overall, there'll be about close to 250, 300 investors present during all 3 days, starting from a startup up to even IPO stage. Second stage, again, over 50 venture capital partners will be there who will look at the growth stage from 5 million to 50 million. Over and above that, we also work with players like CLSA who are looking at pre-IPO and IPO segment, where again, there are some very high quality meetings that will be organized with the companies which are in either advanced stage of IPO or who are already IPO'd and they want to kind of talk to, let's say, real fund managers to understand their strategy, to understand what they're looking at. So on the whole, I expect about $15 to $20 million of funding to happen during these days. At the same time, the influencing, which will continue, will be easily about $500 million to a couple of billion. That's the kind of outcome we are looking at.
And we'll bring you all that action from GFF tomorrow and day after. On that note, it is time for us to head into a short break. But coming up next, homegrown pet food startup Drools raised $60 million last month. How does the company plan to use the funds to scale? And how big is India's pet care market? We tell you on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. India's pet care industry is set to touch 10,000 crore rupees by 2025, prompting global conglomerates to enter the sector. Last month, El Caterton infused $60 million in Drools, a homegrown pet food startup. Now, the biggest investment made in the sector till date. My colleague Yashraj Erande brings you the story.
Good boy. Good boy. Good boy. Good boy, that's my dog.
The realm of pets has grown into a thriving industry in India, a testament to the profound connection that people find with their animal companions. The pet population in India is estimated to be around 32 million and is growing 11% per annum. To cash in on this surge in pet ownership, 70 new pet firms were founded in the last 2 years, as per a Decipher report. Now, as people are spending more on pet products and services, the investor interest in the sunrise sector is also growing. Between 2021 and 2022, close to $77 million worth investment has flown into the sector. In fact, El Caterton, which invests in pet food businesses globally, has also marked its foray into the India market with a $60 million investment in Drools, making it one of the largest in the sector.
We were the first to be an Indian brand, making inroads into the category which is crowded by the Western brands and imported stuff. The investment brought us a lot of credibility to the brand, the way the business has been built. The investment will go in investing in building our better capabilities, better infrastructure in terms of warehousing, supply chain, our international expansions, and investment in the category to reduce the knowledge gap.
A remarkable shift has swept through our society, reshaping the way we cherish and perceive our animal companions. Pets have now transcended the conventional role of just merely being domestic animals and have taken their rightful place as cherished members of our families. Now, in the dynamic landscape of commerce, this shift has not gone unnoticed. In fact, the pet care industry has seen remarkable growth and diversification over the years. Today, the pet food segment commands a lion's share of the market, followed by accessories, grooming and healthcare.
Currently, the whole pet industry is around 6,000 crore, 6,500 crores turnover per year, which about 65% is pet food. And from a pet food background, pet food will become a $1 billion business within 3 years. So we have currently 3 running facilities. Fourth one is in the way and will be another 3 months up and running. Our total capacity is right now 7,800 tons. And we're selling close to 5,600 tons per month now.
Drools holds about 38% share of the pet food market. On the volume side and on the value side, it claims to stand at about 17%. The company is now looking at the premium segment to bridge the volume-value gap.
One of the challenges as a brand we face that pet food is expensive than human food. So what we're trying to do that, you see 90% of our raw material are in-house source. Our product range lines from mass economy to premium segment as well. From 125 rupees per kg to 700 rupees per kg. So that every strata of the customer can afford and use the balanced and right quality nutrients from Drools portfolio. Now we're getting our products in the premium segment because the customers are getting used to more premium line of categories in not only FMCG but as well in the pet industry as well. So premiumization is happening and we want to ride that wave. Signature has come in that play. We have grain zero formulas, we have prescription diets.
Drools clocked a top line of 500 crore rupees in FY23 and expects to hit the 700 to 750 crore mark in the current fiscal.
This year again we're looking at a robust growth of 40-45%. The significant growth is coming from Tier 2 and Tier 3 cities. The pet ownership is growing. The towns like Bhubaneswar, Patna, Guwahati, Surat, tremendous.
India's pet care market is the fastest growing in the world. Drools expects that the market will grow approximately 20% over the next 5 years to reach over $1.2 billion by 2028. While the penetration is tiny with only 10% of households having a pet, trend suggests that there is hope for growth in homes and heart. With camera person Gaurav Tyagi, Yashraj Erande for CNBC TV18.
Onto a CNBC TV18 exclusive, Google Cloud CEO Thomas Kurian said India has become the company's largest market in the Asia-Pacific. Speaking to Shireen Bhan, Kurian said that it is the world-class infrastructure and best development AI tools that has made Google Cloud the top software company in the world. He also explained why 50% of AI startups and 70% of AI unicorns are using Google Cloud. Take a look.
Just globally, our cloud business, Google's cloud business, just by itself, is now one of the top 5 enterprise software companies in the entire world. And so it's a very large business. When we started just 4 years ago, it was an extremely small business. And most other companies in enterprise software have been around for 20, 30, 40 years. So in just 4 years, we built one of the largest enterprise software companies in the world. Now, if you look globally, Asia Pacific from a GDP point of view is about 35% of the world's GDP. So we do expect over time cloud spending to look similar to the GDP because technology is increasingly a part of almost every industrial sector. And so we would estimate it's proportionate to GDP. India is by far our largest market in Asia Pacific, and it's growing also one of the fastest globally. So a lot of positive indicators for the work we're doing in India.
Let's talk now about the big story globally that's playing out for just about every tech company, including yours, and that is Gen AI. And this was really the centerpiece of the Google Next Summit as well, Cloud Summit as well. I want to understand from you what the roadmap looks like over the next few years as you try and bite into this opportunity.
So generative AI, Google has been working on AI for 20 years. We've introduced a variety of different AI products. But when we look at generative AI, we're introducing essentially 4 classes of new products. The first thing we're doing is providing companies that want to build their own models a great infrastructure consisting of a variety of new types of accelerator chips available through our cloud regions. We're very fortunate that 50% of all startups ever funded in AI, and 70% of all AI unicorns use our infrastructure to do exactly this.
Why do you think that's the case? Because you've been around for 4 years versus the legacy that your competitors have had for almost 2 decades now. Why do you believe 70% of the AI unicorns are using Google Cloud?
Because we have the best technology. Just to give you a sense, if you train a model on our infrastructure, it trains at 2x, 2 times the cost, performance, throughput you need. Meaning, in other words, if you're building a large model, you spend either half the money or half the time or both to do it on our infrastructure that you do on others. So one piece that we offer is world-class infrastructure. The second piece is a set of development tools for anybody in any department, whether that's marketing, sales, customer service, human resources, to build AI-powered applications. And we are seeing this spread across all the industries. It maintains the privacy of people's data and segregates it while giving them all the advanced services that.
With that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.